Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the Digital Asset Summit in New York City. Joining me for this segment, we have Steve Ehrlich. He is with the Wall Street Blockchain Alliance, where we take a look at the maturity of the cryptocurrency space. Before we get into that, I just want to say a quick hello to two of my favorite fans, Hallie and Sydney. It's great to have your dad on set with me, Steve. As always, thanks for joining me.
Thanks,
and let's talk about scaling blockchain, kind of where we are in some key use cases.
Sure. So this is a really important question because once we kind of get over the first hurdle about whether or not blockchain is applicable for X, Y, or Z, the next question is, can blockchains handle this? Most people that have read something about the crypto space know that Bitcoin can really only process about 7 transactions a second. Ethereum's not much better, about 13 compared to Visa or MasterCard that do 150 million a day. It's not even comparable. Now, that's not quite a fair comparison because although Bitcoin was created as a payment network, blockchain is useful for many other different types of applications. So the real question is trying to find the right mix of throughput, privacy, and decentralization for a use case, because a supply chain application doesn't need the throughput of an IoT payment space. And there's a lot of great work being done in the permission space. They have blockchains that can handle hundreds of thousands of transactions a second, and even in the public space with some layer 1 type technologies such as sharding, which help increase the throughput, and layer 2 technologies such as sidechains that basically create separate payment channels that are anchored to a public blockchain that utilize the security of the public chain but offer higher throughput.
What about solving for interoperability challenges?
So that's the next question, because at the same time, and this is really relevant for people in boardrooms all across the world that are trying to determine if they should put millions of dollars into blockchain. They don't want to bet on the wrong horse. They don't want to make this investment and realize that they chose the wrong platform. Now, this is fortunately being solved as well because, for one, most of the key players are open sourcing their technology, letting people build on top of it. And other major players, such as, for instance, the Enterprise Ethereum Alliance and Hyperledger, are actually working together to make sure that their platforms and systems can talk together. So although interoperability is a big problem, is a challenge, most people think that it will be solved by the time blockchain is ready for prime time.
What about the ultimate role of stablecoins?
So I think I've counted so far, stablecoins have been mentioned about 57 times in this conference.
Really?
So there's a lot of interest in it. Stablecoins were really created almost by accident. I mean, they were really only created because Bitcoin and Ethereum, Bitcoin and Ether had so much volatility that nobody was willing to spend them. No merchant wanted to accept it because if they took the Bitcoin as a currency and then it dropped by 20%, they couldn't pay their suppliers. So we needed something that could better act as money and serve as a unit of exchange that would be worth the same today as it is a month from now. Also, a lot of companies weren't able to get banking license, weren't able to get bank accounts, and it was easier for them to sort of hedge against price risks by keeping money in digital currencies. Now, in stablecoins. Now, there are some problems with stablecoins. I mean, for one, we followed the Tether Bitfinex story, where, for instance, they're no longer backed one-to-one by fiat, which potentially could impact the price. Other stablecoin issuers are doing something similar, and at the same time, there's always the fear that if central banks ever issue their own digital currencies, then what do we need a stablecoin for backed by fiat dollars in a bank? That creates an added layer of risk that's not quite necessary.
Well, another hot topic here at the Digital Asset Summit has been alternative forms of capital formation. What about the legacy role of ICOs?
So ICOs, I mean, it's hard. There's a lot you can do with the ICOs. I mean, I tend to look at ICOs as a bit of a positive thing because I feel that ICOs are used to fund distributed applications or dApps that sort of heighten our expectations of what blockchain can do beyond just being a payment system. I mean, looking at identity, for instance, where people can authenticate themselves and log into different platforms without having to give all that data to Google or Facebook, which is a great thing. But at the same time, a lot of people lost money, and we want to find a way to democratize access to investing in these platforms in a way that's responsible. What a lot of companies are doing now are doing STOs or standard token offerings, where they're not even trying to pretend like their assets are not securities, but at the same time that leads to the same problem that's only available to really high net worth investors.
All right, we got 30 seconds left here to talk about regulatory clarity. Are we going to get any of that in the next 12 months?
Probably not a ton, because we're still dealing with questions about how is a token a security? Is it a utility token? Is it a commodity? What the regulatory jurisdictional battles aren't going to be solved because we don't know what the tokens are quite going to be. And even when certain regulators issue guidance, like the SEC gave some framework guidance last month, sometimes it can create more questions than answers, because at the end of the day, every application, every token depends on a unique set of circumstances, and it's really hard to have any sort of standard guidance to add clarity to that. So I don't envy regulators. They have a very tough job.
It's really tough keeping up with the speed of technology advances. Thank you so much, Steve, as always, for joining me. And thanks for joining us at the Digital Asset Summit. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.